Chapter 4, MCQs, Specialized Cost Management Technique. Start பண்ணலாமா? ரெடியா இருக்கீங்களா?
Okay.
Which one is not form part of cost reduction? Option A, real and permanent savings. B, reduction in cost per unit. C, quality of product may get affected. D, none of the above.
It's based on cost reduction. Yeah. Which one is not form part of cost reduction? Not, cost reduction.
C is a quality of product may get affected.
Because the definition of the cost reduction is real and permanent reduction. Reduction in savings per cost per unit of the product without affecting the quality of the product. Here, quality of the product may get affected. Therefore, C is not form part of cost reduction. Next.
Assumption in cost reduction includes option A, savings in cost per unit. B, permanent in nature. C, quality may unaffected. D, all of the above.
All of the above.
Savings in cost per unit is correct. Permanent savings correct. Quality may unaffected. Therefore, all of the above. Everything form part of cost reduction only. Next.
Key areas focuses on cost reduction includes option A, reduction in expenditure. B, increased productivity. C, all of the above. D, none of the above.
All of the above.
All of the above.
Reduction in expenditure, increase in productivity, all of the above. Good. See, all of
Cost reduction. Okay.
Yes,
Cost reduction can be achieved in product designing. B, innovation and marketing. C, packaging. D, all of the above.
All of the above.
All of them.
Cost reduction can be achieved in product designing also possible, innovation in market also possible, packaging also possible. Therefore,
All of them.
next. Cost reduction technique includes value chain is a cost reduction technique or not? Yes. Operational research, quality control.
Yes.
All of
All
the
of the above.
Next.
Method and situation. Method, cost reduction, cost control. Situation, permanent savings, dynamic approach, preventive function, continuous process.
Okay. So what and all will comes under cost reduction and what comes under the cost control. Permanent saving will comes under
Cost reduction.
Cost
reduction.
yeah, cost reduction.
Dynamic
approach,
cost
cost reduction.
reduction.
Continuous process,
Cost
reduction.
reduction.
cost reduction only. Whereas preventive function,
Cost
Cost
control.
control.
therefore,
Cost control.
1, A, B, and D. Am I right? Whereas 2,
Yes, sir.
C is the correct. Therefore, option
A.
A is the correct one. Option A is the correct one. Price negotiation with the raw material supplier comes under
Cost control.
No. Price reduction will comes under cost reduction. I'm going to raise price reduction with the raw material supplier. Therefore, real and permanent reduction in cost per unit of the product. Raw material cost reduce means per unit cost will come down. Okay. Standard costing budgetary controls are tool for
Cost reduction.
Cost control.
Cost reduction. Control.
value engineering,
Cost control.
cost reduction.
Cost control.
Cost control. Next. Which one is not form part of cost reduction? Reduction in refreshment expenses, JIT, price negotiation, none of the above.
Reduction in refreshment expense.
Reduction in refreshment expense comes under the cost
Cost control.
control. Next. Second segment, life cycle costing based one. Okay. Life cycle costing as a practice of obtaining over the dash of the best use of physical assets, calendar period, lifetime. Life cycle is for the calendar period or lifetime?
Lifetime.
Lifetime of the assets. Okay, lifetime of the product itself. Life cycle costing involved tracing cost and revenue of the product over dash calendar period. Several calendar
Several.
and definition calendar will come so that student will get the confusion calendar period. So it should be. Life cycle start from dash beginning of the period, new idea generation, all of the above, none of the above.
New idea.
idea generation.
Time of idea generation. So next, product life cycle start from the time of initial dash on the product to customer service, R&D, manufacturing, none of the above. Initial R&D.
R&D.
Which one is form part of stages in product life cycle? In form part of, okay, introduction, growth, maturity, none of the above.
D.
None of the above. None of the above.
Why?
D.
Not
Stages.
Stages.
Very good. So how many stages are there?
11 stages.
11
11 stages.
Market research,
Autonomous.
specification, market research, specification. Next,
Design.
design product,
Prototype manufacture.
Manufacture.
Development.
development,
Tooling.
manufacturing, selling, distribution,
Manufacture.
after sales service, and decommissioning,
Replacement.
decommissioning or replacement. Good. Customers are innovators. Competition is almost negligible in case of dash.
Introduction.
Beginning of the period. Customers are innovators. They don't have the much idea about the product. And we are only launched the product. There is no much competition. Therefore, that comes under the introduction stage. All able to follow? Next. Sales and the profits are rising in the rapid pace.
Growth.
Match it. Introduction, growth, maturity, and decline. Situation, competition disappear. Rise sales at a decreasing rate. Large market size, customers are innovator. In case of introduction, customers
are innovators.
Customers are innovators.
Then growth level,
Right.
Large
market size.
Market size.
comparatively large market size is suitable. Yeah. Maturity,
Rising sales
Competition
at
Rising sales at
decreasing rate.
Decline
decline stage,
Competition
disappearing.
disappearing.
1D, 2, C,
C,
3,
B,
E,
4, A.
A. Good. Which one is not form part of maturity phase? Rise in sales at a decreasing rate. Yes, correct. Reduction in price due to competition. Product awareness is high. R&D cost.
R&D cost.
R&D cost.
Very good. Customers' knowledge about the product is high in maturity, decline, all of the above, none of the above.
Maturity.
Maturity.
Yeah. Next. In decline also, they will have the, in maturity stages, the knowledge is there, means decline also they will have the knowledge. No? Yes or no, Varna? Therefore, maturity and decline may be the correct answer. Am I right? So, all of the above is the correct answer. Because in maturity stage itself, they are having knowledge. I mean, definitely they are having knowledge over in the decline stage itself. Am I right?
Okay.
What's Sruti?
Yes, sir.
busy.
Yes, sir.
Then, stages in product life cycles are market research, yes. Specification, yes. Designing, yes. Therefore,
All of the
All of them.
which one is
All
not
of the
from
above.
of stages in product life cycle? Manufacturing, selling, distribution, growth.
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 Grow.
Growth comes under
phase.
Yes,
Phase.
yes.
next. The next segment, the same chapter. Target costing. A structured approach to determine the cost at which a proposed product with specific functionality and quality must be produced. 2. Generate a desired level of profitability at its anticipated selling price is what?
Target price.
Target price. It's a target costing technique. Advantage of target costing includes enable to achieve cost reduction, minimize non-value added activities. It uses management controlling system. All of the above.
All of them.
All of the
The
above.
above.
Yes. Steps to implementation of target costing not include create project charter, yes. Obtain management sponsor, yes. Obtain budget, yes. Fix selling, targeted selling price.
D. It's target selling.
D.
Fix selling price. So what are all the steps in implementation of target costing? Create project charter,
Obtain management sponsor. Obtain a budget.
then leader,
train
to
participant,
And
use
project
management tool.
leader.
Yeah, project.
a team and tools of
Okay, good. Anna, welcome. You came. Good. The flow of target costing will be product specification, thereafter product design, estimated cost, targeted price, or product specification, target cost, targeted price and the volume, targeted profit, targeted cost, production. All of the above, none of the above.
B, sir.
B.
D.
Option A.
Specification,
B.
after price, then profit, out of its cost. Therefore,
B.
good. Throughput accounting, theory of constraint. In this basis of principle that profits are expanded by increasing the throughput of the plant. Optimized production technique, optimized production technology, throughput accounting, theory of constraint. It's a definition of OPT. So OPT stands for what? Next you will get the doubt. Optimized production technology. Optimized production technology. The rate at which raw materials are turned into sales is known as throughput or optimized production technology, area of constraint, none of the above.
A.
Throughput accounting ratio.
That's the throughput. The measurement is called throughput accounting ratio. What is the formula for throughput accounting ratio, Arthi?
Sir, number of raw material converted into sales.
No. What is the formula? Throughput
Time
accounting.
required by available time into 100.
Yes, Balaji. Next, dash resource should be fully utilized to ensure free flow of production. Non-bottleneck, bottleneck, constraint, none of the above. Which resource you have to utilize fully? The object began throughput accounting itself. You have to identify constraint or bottleneck. You know, all the bottlenecks are constrained, but all the constraint not with bottleneck. Therefore, highest of the throughput accounting ratio is equal to bottleneck resources. Therefore, you have to make use of the bottleneck resources purely based on the concept only. No. So that's the reason. Bottleneck resource should be fully utilized. Utilization of dash resources should be subject to limitation to avoid pile up of inventory. Non-bottleneck, bottleneck, constraint, all of the above.
Non-bottleneck.
Bottleneck.
For the answer. Utilization of dash resources should be
Bottleneck.
subject to the limitation to avoid piling up of inventory.
Bottleneck.
If I'm going to utilize
Non-bottleneck.
why non-bottleneck?
Because that is easily available.
No, utilization of dash should be subject to the limitation of to avoid. So avoid is coming.
Non-bottleneck.
How come? What are the sentence meaning then?
Sir, bottleneck, sir.
Utilization of.
If I'm going to utilize
Sir,
bottleneck,
if we use any resource, if bottleneck or non-bottleneck, any resource, if we use beyond a limit, it will lead to piling up, no?
okay. No. Bottleneck we have to utilize. Non-bottleneck, if I'm going to concentrate, then only piling up of inventory will arise. Am I right? The object began throughput accounting ratio itself. We have to identify bottleneck activity. Optimal utilization of the bottleneck activity is the object. Am I right? If I'm going to use non-bottleneck activity, then piling up of inventory will come. Therefore, what would the answer here?
A.
Non-bottleneck.
A.
Why? What is the meaning of this sentence? Avoid is there, no?
To avoid piling up.
Oh, that's what I'm worrying.
The subject to limitations is also there, no?
Oh, that's what double condition is there.
Yeah, so that means it will be A only, no?
What is the meaning then? You can read. Utilization
Sir?
of non-bottleneck resources should be subject to the limitation of avoid. Two conditions are there. Without affecting the piling up of inventory, without leading to piling up of inventory, we can make use of non-bottleneck. Am I right or not? Subject to. Okay, that's why. Okay, good, Hana. Fifth one, based on throughput accounting concept, variable cost is dash. Raw material cost. Labor
Raw
cost.
material cost.
Raw material cost.
Raw material cost alone. Sales minus raw material cost is called contribution, throughput contribution, profit, none of the above.
Through contribution.
Called throughput contribution. Throughput is influenced by selling price, direct material purchase price, utilization of material, all of the above.
All of the above.
All of the
All of the above. Next. With respect to bottleneck and the constraint, both are same. Bottleneck is always constraint. Constraint is always bottleneck. All of the above.
Bottleneck is always
bottleneck is
Constraint.
Bottlenecks are constraint, but all
All
the
constraints
All
are not.
constraints are not bottlenecks.
good. Then dash focus its attention on bottleneck with hinder speedy production. theory of constraint, throughput accounting, constraint, all of the above.
Theory.
Theory of constraint definition. Theory of constraint is focus its attention on bottleneck and hinder speedy production. The main concept is to dash the rate of conversion of material into actual sales in theory of constraint. Minimize, maximize, stabilize, none of them.
Maximize.
Yes, our object itself to maximize. Conversion should be maximum. Dash is an activity where the demand for that resources is more than its capacity to supply. Bottleneck, constraint, throughput, all of this.
Bottleneck.
Bottleneck.
Comes under bottleneck. Theory of constraint describes a method to maximize dash under bottleneck situation. Contribution, throughput contribution, operating income, sales.
Throughput contribution.
All of you. Maximize what? Theory of three key measures of TOC is throughput contribution, operating cost, and
Investments.
investment. Our object is minimization of what and what?
Minimizing investment
Minimization
and
of
decreasing
operating cost and
Investment and the maximization of
Throughput contribution.
throughput
contribution. Therefore, maximize the dash under the bottleneck situation. Throughput contribution. Am I right? Next, key measures of TOC include throughput contribution, investment, operating cost, all of the above.
all of the above.
All of them.
Stock of WIP will comes under throughput contribution, investment, operating cost, all of the above. Stock of
Investment.
any other option?
Operating cost.
So it comes under investment. Stock is a balance sheet item, investment. Suppose consumption of raw material,
Operating cost.
throughput contribution. Sales minus raw material is called throughput contribution. Throughput contribution. Sales,
Throughput contribution.
throughput contribution. Salary,
Operating cost.
Operating
cost.
cost.
Stock of raw material,
Investment.
Throughput contribution.
investment. Stock of raw material, investment.
Investment.
Raw material consumption is a throughput contribution.
Throughput.
Easy. P&L account items are called operating costs other than sales and raw material. Balance sheet items are
Investments.
Investments.
in TOC. Operating costs are assumed as fixed cost, variable cost, period cost, none of the above.
Fixed cost.
Period cost.
Fixed cost, sir.
Variable cost.
Operating costs are considered as fixed cost. That's the reason sales minus raw material cost is a material cost alone. Match it. Key measures and example. Throughput contribution, operating cost and investment, raw material, rent and inventory. Raw material is the
Throughput
Good
contribution.
contribution.
throughput contribution. Operating cost,
Rent.
investment,
Inventory.
Inventory.
1A, 2B, 3C.
Option A.
Option A. World 5 steps method for improving performance includes identification of bottleneck, exploit the bottleneck, synchronize the bottleneck, all of the above.
All of
All
them.
of the
All of the above. Selling price rupees 100, raw materials rupees 60, wages rupees 10, fine throughput contribution
40.
option C 40.
40.
40 C.
Sales minus raw material alone is called throughput contribution.
Thank you, sir.
It's the correct answer. Throughput accounting ratio of mission 1 110%, mission 2 200%, mission 3 250%. The bottleneck resource is 1, 2, 3, all of the above. Highest of the throughput accounting ratio is the
Three.
bottleneck resource.
Bottleneck activity.
Therefore,
Mission 3.
C is the answer. Mission 3 250 is the answer. Are you with me? Highest of the throughput accounting ratio is the bottleneck activity.
Bottleneck activity.
Next. Maximum available time 100 hours. Mission 1 need 120 hours. Throughput accounting ratio will be Balaji's formula. Now you have to apply. What is the formula for throughput?
83%, sir.
Maximum available 100, but needed 120. Therefore,
120%.
120%. What is the formula?
Time required by available time.
Time required time is 120 divided by available time 100 into 100 is equal to 120%. Next, environmental management accounting, which does not form part of major area of application of EMA. Pricing, budgeting, product quality, saving of environmental projects.
Solid quality.
So that is not considering about the product quality, am I right? Other aspects only. Pricing is form part of EMA, budgeting, saving environmental projects also. Match it, cost and the type. Cleaning up contaminant soil, recycling scrap, testing and inspection, investment in productive equipment. Whereas types environmental prevention cost, environmental appraisal cost, internal failure cost, and external failure cost. So you have to match it. First, cleaning up cost comes under environmental external failure cost. Recycling scrap,
Internal
Failure cost.
Internal.
failure. Testing and inspection, appraisal.
Appraisal cost.
Prevention.
Investment in project
Prevention cost.
Prevention.
prevention. Therefore,
Option A.
option A. How many types of environmental costs are there, my dears?
4 types.
Non-performance cost.
What are the 4 types?
Conventional cost, hidden cost, contingent cost, relationship cost.
First one is conventional cost. Second one is
Hidden cost,
hidden cost.
contingent cost,
Hidden cost. And
fourth relationship cost.
relationship cost. Another 2 broad category.
Conformance, non-conformance.
No. That is for TPM. Not here.
Okay.
Another 2
Internal
broad
cost, external cost.
internal and external cost.
External.
External cost.
And another category based on ABC.
Environmental
Related cost.
environmental driven cost.
Environmental driven and environmental related cost. Good, Kana. Which one is not a reason for controlling environmental cost? Not a reason. Okay. Whenever negative condition is there, please be careful. Carbon footprint, governmental regulation, improving brand image, better investment management.
Better investment management.
Yes. Not reason for controlling, better investment management. Next. Shruti Padiganam. Hana, kindly read.
1EE is selling an electronic product that is aiming at a customer base who are early adopters. Their market share in the current year has been growing rapidly, and consequently profits are also increasing rapidly.
Okay.
Market competition is increasing with growing number of competitors of 1EE. Which strategy should 1EE not adopt at this stage? A. Strategy shifts from acquisition to retention of customers. B. Development of long-term relationship with customers. C. Leverage the product's perceived differential advantage to secure a strong market position. D. Build selective distribution channels to target niche customers only.
Option D.
Yeah. Shifting from acquiring to retention customer. Yes, that's the correct one. Development of already existing the product in the market. Development of long-term relationship also correct. Leverage the product. Yes, correct. Therefore, yes, D is a not adopt strategy in this. Okay, because it's a well already developed product. Next.
How is target cost calculated? Option A, desired selling price minus actual profit margin. B, market price minus desired profit margin. C, desired selling price minus desired profit margin. D, market price minus standard profit margin.
Option C.
What could be the answer?
Desired selling price minus desired profit margin.
Market price minus desired selling. What desired selling price supposed to be which price? Depending upon the market condition. Competitor entering the market, their price should be our targeted selling price. Therefore, which is the apt option? The target should be based on market price. Market price minus desired profit margin. Understand?
Profit.
Because the desirable factor is determined purely based on market condition. So B may be the apt option. Shruti.
SW is selling an electronic product that is aiming at a customer base who are early adopters. Their market share in the current year has been growing rapidly, and consequently profits are also increasing rapidly. Market competition is increasing with a growing number of competitors for SW. For this electronic product, which stage of product life cycle is SW experiencing? Option A, introduction. B, growth. C, maturity. D, decline.
Growth stage. Why?
Increasing market share.
Rapidly. Yeah. Market share got increased. That too rapid. Growing rapidly. Profit also increasing rapidly.
Which of the following techniques is not relevant to target costing? A, value analysis. B, variance analysis. C, functional analysis. D, activity analysis.
Variance analysis will not form part of target costing. Hana? Hana, read Rahman. Guess it.
Art Deca is a marble sculpture making company based out of Jaipur, Rajasthan. It has been making miniature figurines for the past many years. It now plans to foray into making larger size statues that can be displayed in gardens, resorts, or large corporate offices. As a trial, it has asked its main designer, Raj, to come up with an appropriate design model that would appeal to such customers. There is already a competitive market for such larger size statues. However, the management of Art Deco has a skilled artist like Raj who can come up with attractive designs for customers. Within this month, Raj has come up with the appropriate design. Jay is the product manager who likes the design but wants to price it competitively in the market. The costing for 200 statues is as below. Cost and amount. So design cost is 5 lakh, direct materials is 20 lakhs, direct manufacturing labor 25 lakhs, variable manufacturing overhead 20 lakh, manufacturing overhead 5 lakh, marketing 10 lakh. First question. The target profit required is 25% of revenue. If the sale price per statue is rupees 45,000, what is the target cost per statue?
Simple question. Selling
A.
price 45,000, out of which profit they need 25%. Balance equal to target cost. So 45,000 minus 25% is equal to how much?
33,750.
750.
So what is the answer? 33,750. Easy or not? First question easy.
What is the cost estimate per unit as per the cost information given above?
Okay. How much the cost per unit? Cost estimation per unit. Based on the above information, what are the cost? How much Karna? How much the designing cost? What are the total cost Karna? Total estimated cost.
Scroll up.
Designing cost 5 lakhs, material cost 20 lakhs, labor cost 25 lakhs, overhead 20 lakhs, fixed overhead 5 lakhs, marketing 10 lakhs. Total cost comes so much?
85 lakh.
40 to
How many
500.
units?
B is the answer.
That is for 200 products. Am I right?
40 to 500.
40 to 500.
Per unit cost is how much? Yeah. 42,500.
500.
Good. Then third requirement. Give your calculation in A and B as the target cost per statue has been met or not. What is the targeted cost? We got it in the first one, 33,750. Whereas actually are incurring 42,500. Therefore, we are not achieved the targeted cost. Am I right?
Yes.
Expected cost, you are not at the point achieved. No. The answer is no. Estimated cost is higher than the targeted cost. Then, great Rakana.
During the course of discussion, Jay, the product manager, found that the designer Raj plans to use high quality marble for these statues. Jay suggests that he use a much lower quality marble for the statues. This would reduce the material cost by 60%. Skilled labor hours required will also be reduced, resulting in direct manufacturing labor to reduce by 50%. Accordingly, what would be the revised estimate cost per unit if value engineering is applied?
So, the impact is 60% savings in material and 50% savings in labor cost. Am I right?
Yes.
So, go back to the question. How much is 60% on material cost? $20 lakhs into 60%. Am I right? And 50% on labor cost, 25 lakhs into
50%.
That you can adjust the total cost. Previously, how much the total cost we got it?
85 lakh.
85 lakhs minus this. Yes, 85 lakhs minus this. How much? 85 lakhs minus 50% savings in labor, 60% savings in material. Comes to how much, Kanna?
So,
How much, Kanna? 12 lakh plus 12 lakh 50,000. Kanna? Divided by number of unit, 200. How much revised target cost? Kanna? Revised estimated cost?
30,250.
Revised total cost is how much after adjusting the same?
30,250.
Okay, the answer is 30,250. Yeah? Okay, divided by 200 is
Yes.
equal to 30,250. Yes, C is the answer. Answer is that, right? Next.
Given your calculations in 1 and 4, has the target cost per statue been met? A yes, B no.
How much the target cost? We got it in the first question. 33,000
37.
33,750.
less than that, right?
Yes.
Yes, we achieved. Next question.
Raj, the designer, does not agree with Jay's proposition given in 4 above. He feels that inferior quality material would affect the durability of the statue and hence would affect the demand for it in the long run. Instead of value engineering, he feels that 10% increase spending in market can increase the selling price per statue to rupees 50,000 per statue. The target profit required is 25% of revenue. Given this scenario, what is the target cost per statue?
Okay. The impact is what? 10% increase the selling price. That is spending market cost, marketing cost. Am I right? And selling price per statue?
50,000.
50,000.
Increase or the increase. Target cost required is 20% on revenue. Give this scenario, what could be the targeted cost per statue?
37,500.
37,500.
Selling price minus profit itself, you can get target cost. Am I right? How come 37,500
50,000 into 75%.
is equal to? Very good. Is it right? Yeah, 37,500. Seventh one.
Given the situation in 6, what would be the revised estimate cost per statue after increasing the spend on marketing?
Yes. Marketing, they ask you to increase by 10%.
10%.
Find out. Already 85 lakhs, or which is situation? Based on situation 6. After increasing 10% in cost, how much? Per statue, how much?
43,000.
43,000.
3,000.
3,000
How much? Total cost is how much?
86 lakh.
plus 1 lakh.
3,000.
85 lakhs plus 1 lakh. Am I right? Divided by 200 units. Am I right?
Yes.
So 43,000 per statue. Next question.
Given your calculations in 6 and 7, has the target cost per statue been met? Yes or no?
Target cost is how much?
33,750.
Therefore, yes or no?
No.
Again, based on the above proposal, we got more than that. No. Our cost is higher than the target cost. Next.
What is the estimate profit earned per statue as per 4, adopting value engineering, and 6, increasing the marketing spending?
The above situation, what could be the profit? Kanna? We got 43 lakh cost per statue. So what could be the profit?
7,000 per statue.
7,000 per statue. How come?
50,000 selling.
1,000 minus 40.
43,000 comes to 7,000.
7,000.
Okay. Whereas based on value engineering above,
$14,750.
how come 14,000 gonna
45,000 selling price minus 30,250 cost.
very good, very good. So profit as per the fourth situation and sixth situation separately. So option A is the correct answer. Am I right? Simple question. Enjoyed?